Join us as we deep dive into Pakistan's financial markets, bringing you commentary, opinions, and analysis from the leading voices and experts in this domain. Together, we will learn how to capitalize on the opportunities and navigate the risks that are present. Our end goal? To become knowledgeable and confident investors. So let's go.
We have an absolute treat for our audience on this episode. Our guest, Mr. Nadeem Hussain, is the founder of Telenor MicroFinance Bank, lauded by World Bank as one of the most socially impactful banks in its field. He launched and spearheaded EasyPaisa, the world's second largest branchless banking payment solution, and perhaps the greatest fintech innovation to emerge out of Pakistan in the last decade. And in his most recent role, he has founded PlanX group of companies, an early stage VC with portfolio companies in Pakistan, Egypt, and UAE. Mr. Hussain is a global authority on financial inclusion and development through digitization and has been a speaker at Ivy League universities, Big Tech, and the United Nations. On this episode, you'll hear about the Telenor Microfinance journey, from the initial opportunity to the early setback and then the subsequent path towards profitability. We discuss the EasyPaisa story in great detail, on what problems the team first solved in order to achieve adoption, the failed experiments, and then the eventual success as the team gained scale across millions of users. Finally, Mr. Hussain paints a picture for us of Pakistan in the year 2025 as it relates to the digital economy as well as the opportunities available. If you're into an MBA-style case study on real-world business success, this episode is a must-watch. Enjoy. Nadeem Bhai, welcome to the show. It is a privilege to have you on as a guest today. I've read up on your professional journey, and I'll tell you it's been a fascinating read. In fact, our plan today will be to unpack some of the insights and learnings from your experiences, whether it was founding and leading Tameer Microfinance Bank, spearheading the digital initiative known as EasyPaisa in Pakistan, and then as well, your recent experience working as an early stage venture capitalist. But why don't we start off with a higher level question to begin this discussion? In a recent interview, you said, and I quote, "This is a great time to invest in Pakistan, as well as this is a great time to ride this wave." What are some of the reasons that you have behind this optimism?
Well, there are multiple reasons. Firstly, we have a very young population. Our median age is 22. That means 50% of Pakistan's population is under 22, which is a huge opportunity for those people who are looking to develop something which is technology based. Secondly, Pakistan is, from a handset perspective or telecom perspective, is getting more and more smartphone savvy. So there are 50 million smartphones in Pakistan right now, and a total of about 130 million total phones, out of which 50 is smartphones. 90% plus of Pakistan is covered by GPRS, which means that only 10% of the country is left where 4G is not available. But in some cases, I agree, even though we have coverage, it's 2G as opposed to 4G. Thirdly, with the advent of COVID, and I made my comment before COVID, but with COVID, a lot of things have gone digital, whether it's ed tech, it's health tech, it's delivery, it's fintech, it's insurance tech. People are learning to use applications without having a physical presence. So that's an added benefit, which at the time when I made my comment was not there. Lastly, Pakistan's valuations in companies compared to our neighbors or regional players is very low. For a country with 220 million opportunity to scale, granted the purchasing power is less, but still there is purchasing power. For me, is a perfect storm as far as investment is concerned. That's why whatever money I made in the sale of Tameer Bank, I've reinvested in tech companies through PlanX.
Thank you for setting up that conversation, and that makes a lot of sense. In fact, you mentioned Tamir, and let's move our focus towards that. In 2005, You founded Tameer, Pakistan's first scheduled microfinance bank, with a focus towards the less privileged and the unbanked segment of society. Now, at that time, you decided to go all in this with this investment. And what I mean by that is you plowed in most of your life savings into the seed capital of this business. Help us understand what was it at that time, the factors that led you to be so confident about this microfinance opportunity in Pakistan.
I think it was a case of overconfidence, but in the end worked out right. There's a sher by Iqbal which says, and I'll translate, it says, बेखतर कूद पड़ा आतिश नमरूद में इश्क अकल है मैबे तमाशाए लबे बाम भी. That means that in the case you decide something with your heart and not your mind, because your mind would tell you that this is not the right thing to do, but the heart tells you this is the right thing to do. So I would not advocate to people to go all in like I did. I think I was overconfident. Uh, but however, that confidence worked out. It may not have worked out, so it could have been a high risk strategy. But I haven't learned my lesson because I've gone all in again. Uh, so I was confident, not just in myself. I had picked a very good team. There were three people who were ex-Citi bankers who were working with me, and we burnt our boats. Therefore, we had no option but to ensure that the company succeeded. Now, that's not always a good strategy, but we had, there was no plan B. Normally, I have a plan B. And my view was that there is such a large swath of population and no current provider which is doing what we were planning to do, then we would have a high chance of success. We had many hiccups on the way. We learned a lot on the way. And when you have your own money on the table, you learn very fast. So uh, I was confident, and I said, maybe a little overconfident. There was a touch of arrogance as well, because I was coming from Citibank after 27 years of global service and thought we could walk on water and not get wet. So reality gave us a very humbling experience, but we learned our lessons and we pivoted and we ended up positively and strong.
Thank you for sharing that. In fact, I'll hone in on one of the hiccups that you said. In year two of your journey with Tameer Bank, my understanding is your loan delinquency ratio shot up to 25%. That's staggeringly high for most banks, whether microfinance or commercial in nature. And so I'll ask you, in fact, I'll put a caveat there. You've mentioned this in the past. This was a lesson in humility for you. And
Yes.
so, using that and drilling down, I'll ask you, what was it that you and your leadership team did not understand about the microfinance business at the time?
So all four of us didn't have any microfinance experience. And in my 27 years of experience, I had only worked in Pakistan 5 years. So my experience has mostly been global, except for the 5 years I ran Citibank Consumer Bank. When we came in, we looked at Karachi and we said this is a city of 20, 25 million people. And, we would have span of control because our branches would be in Karachi. We could visit them, we could see them rather than go outside to Pakistan. And that's where we would start. At the time, there was no microfinance institution or bank of significance in Karachi. That should have been a red flag that people who were practitioners were not in Karachi. Why was that the case? We ignored that in our, arrogance that, we would get this right, knowing very well that none of us had done microfinance before. Secondly, we were focused on sales. In the first year of operations, we had 20,000 customers with zero default. And we lost sight of the fact that the low default rate of microfinance customers is because you have customer interaction. We were rewarding branches on a monthly basis for giving the highest number of loans, not even realizing that the number of loans they were reaching, if we had looked at our own process and the time involved in our process, it was not humanly possible to do those loans, which means corners were being cut. What happened was that because we were so sales focused and rewarding people for sales and delinquency, most of the branches in Karachi got contaminated by what we call touts who came to them and said, "Sir, why do you have to go out in the market to find a customer? Let us find the customer for you." You tell us what the underwriting criteria is, and we will find customers of those nature. So they started reverse engineering the credit process, and we started getting a high level of approval. That again should have been a red flag, but because of our inexperience, we didn't catch that. How we caught the problem is very interesting. In a particular branch, a tout and the branch manager fell out in the amount of commission that was to be paid. The tout, to teach the branch manager a lesson, disappeared. And therefore, delinquency in that branch from zero suddenly shot up to 5-6%. So we sent in a SWAT team that what was happening in that particular branch. And then we realized that the branch and the relationship manager didn't even know where the customers were. Now, traditional microfinance banks would have figured this out. We were new to the game. We were arrogant. While I opened every branch myself, selected every branch manager myself, this was basic microfinance 101, which we missed. So we not only got to 25% default, about 170 million worth of default. We were burning our capital because you need to put up technology, you need to put up branches, but we were also getting default, which we had not planned for. And our minimum capital ratio started eroding. And I had some money left, and I invested that money as well. Okay, so then there was nothing left. We pivoted by creating a separate verification department. So we were not limited to the branch manager as the sole person who could make, the call. We set up a call center for a welcome call to validate that the customer actually existed and he had met the branch manager. We moved out of Karachi to Hyderabad and then to Lahore. And we created a product called gold-based lending, where Pakistan, as you know, is a gold country which has a lot of gold ornaments, and we started lending against that. And in 2 years' time, we recovered close to 60% of our money, 40% we left off. And the third year, we actually became profitable, marginal profit. So there was learning and humility as to see why the market is not doing something, but not necessarily follow them, but be aware of them and try and understand the reasons. And don't be fixated on just sales and look at what the red flags that were coming our way. We just felt that we knew this business, even though we had no experience, because we were so smart. We were city bankers, and we would know. We knew this business. We didn't. So we learned our lesson the hard way. But the team dug in, and we recovered. We pivoted, and we created the most profitable and in globally one of the most successful microfinance banks and branchless banking processes in the systems in the world.
And you surely did. Those corrective measures absolutely helped because Tameer grew leaps and bounds after those early setbacks. Right. In fact, so much so that in 2008, Telenor approached you and acquired a majority stake in Tameer. In 2016, they closed the deal and acquired the bank outright. Now, during this time, you helped spearhead the launch of EasyPaisa, the digital payment solution in Pakistan. In fact, reports that I've read say EasyPaisa is probably the most significant piece of financial innovation to emerge out of Pakistan in the past decade. And so all in all, congratulations on that front. Speaking about EasyPaisa, I believe you made an entry into the market by providing a convenient method for utility bills to be paid by the common man. And I'm going to ask you, what was it about this specific problem that you decided to tackle as your first foray into digital payments business?
So let me just give some more perspective. So once we started our journey and we've taken the corrective measures and our loss norms started to come down, we wanted a very large branch network. And although our cost of setting up a branch was 1/10 that of a commercial bank, we still would need to raise tons of capital if we were to create the branch network that we wanted. And a common man wants what? A common one wants to be able to withdraw money, deposit money, pay a bill, make a remittance. That's the need of the common man. So we were looking then for a railroad that was available to us, which could ride on and do a pay-as-you-go status. We approached the Bill Gates Foundation through CGAP, and we got $1 million grant to actually do research on this. And for a year, we basically did research to figure out what the common man, because Pakistan is hugely financially excluded. the number of people who have active loans in all of Pakistan is less than 10 million people in a country of 220 million people. Now bank accounts have increased, but at that time, bank accounts also were very little, and so was insurance. The central bank and the PT at that time was starting to look at brushless banking. And I was part of that committee. The central bank had asked me to assist them. And we knew very well that in Pakistan, it would be a bank-led model as opposed to a telco-led model like in Kenya, which is M-Pesa, which is used to be the world's leader. The telcos in their arrogance, so we are not the only people who are arrogant, the telcos in their arrogance thought it would be a telco-led model. We were convinced and we knew that telcos would be going around looking for entities to partner with. And therefore that 1 year we created our research, our understanding, our products. So when the telcos came around talking to institutions, we were head and shoulders above everybody because we had spent a year understanding, perfecting, understanding the problem statement and looking at technology. We basically told Telenor that we wanted a pay-as-you-go model, but they saw the value in the proposition because the telcos had built the railroad, but they were only selling airtime. Using the same road and including financial services would give them a major pickup in their own bottom line and a reduction in the churn of their own telco customers. So they insisted on equity share participation, which it took me only 3 minutes to agree on. I owned, between our companies, we owned 60% of the company, and we sold 51% of the company. So I came down personally to 29%, which was fine with me because the value we got from the branch network they had, the agent network, suddenly from 100 branches, we were in 25,000 locations where people could withdraw money, deposit money, transfer money, and pay a utility bill. And we got the brand. And many people have more trust in telcos than they have in banks itself. So for me, it was a no-brainer. The issue was a discussion and challenging on the valuation piece. And I think both of us got to a stage where we were both happy with that valuation we got. Once they put the money in, we recapitalized the bank and then started jointly to look at the solution set. There are 30 million utility bills in Pakistan which are paid monthly minus the telephone bill. So this is water, gas, electricity. They're currently paid typically through a bank branch, and banks are obligated to pay this as per regulations of the central bank. They hate this because they only get 8 rupees per bill. And they make life as difficult as possible for the customers. So there are queues, people standing in line, and the people who are coming for this bill payment are not the bank's typical customer. So they don't like them in their lobby. And the people, you and I maybe would send a driver to pay the bill, but the average Pakistani has to take time off. If the shopkeeper, take the time off and stand in the queue themselves. So we figured that if we could create a neighborhood payment scheme whereby he could go to his neighborhood Kriana or mom and pop store where he bought his groceries. And in my recent article, I said these guys are open 12 days, 7 days a week, 16 hours a day, and they don't play golf on Saturday and Sunday. So, they're there for the customer. If he or she could pay their utility bill there, then we would provide a great service. We would never make money on the utility bill service. But what it would do is create the confidence of a customer that he could do a financial transaction at a mom and pop store. So that was the first big behavior change. And therefore, we had to take something that was simple and we could create awareness and we could create confidence. The way we created confidence was in two ways. One, we told the shopkeeper to give them a receipt with the Tameer Bank stamp on it so that they felt that they had gone to a bank and the bank was responsible should there be any problem with that bill payment not being made. Secondly, I gave an order that I did not want any disputes whatsoever in the bill because the average bill was 2,000 rupees. So I said, if the customer is saying the bill is there, just pay. No contest with the customer. If he says that bill is paid, take that bill. Right now, EasyPaisa does, I think 3 to 4 million bills a month. They have 10, 15, or maybe even more. I don't follow that number anymore. But initially, that's how we built the confidence as far as bill payment was concerned. Then we said, okay, now the customer has confidence that I can pay my utility bill and the bill is being paid and not being cut. The line is not being cut. This financial services system works. Then we said, okay, what else can we do next? And we came up with this, what we thought a brilliant idea, international remittance. There's $17 billion of international remittance a year. Bank branches are 12,700 branches. We at that time had 30,000 locations. And we said, if we tap into this, we'll be able to take all this business and we will got the exchange as well, because we would have so many more outlets than all the banks combined. Didn't work. Didn't work because, again, we didn't realize that the average remittance is $40,000. Sorry, 40,000 rupees. And how many of our mom and pop stores would have 40,000 rupees in cash for a cash out? They would not be able to service it. So the only people who would service this would be franchise locations of the telco itself. Sorry, franchise locations and telco's own location, which were about a couple of thousand. So this edge we thought we had in distribution got lost. But that international remittance gave us the idea for domestic remittance, which is the main product which EasyPaisa became famous for. The previous way people were transferring money was Hawala, Hundi, somebody going to their village, so sending money with them, or the post office. We were able to develop a system that you could go to a EasyPaisa agent, give them your CNIC number, the beneficiary's CNIC number, the beneficiary's telephone number, your own telephone number, and they would say put in a PIN. So you would give them, you would make your own PIN. Within a minute, that money was available at all our locations. The beneficiary would just have to go to the agent and say, I've accepted remittance. He would say, show me your CNIC. Here's my phone, put in your PIN. The money would be available. That was the revolution where we were able to move all that money, a bulk of the money going from Hawala Hundi and the post office. And keep in mind, Altamash, we were charging 5 times what the post office was charging. So the point I'm making is the people at the bottom of the pyramid don't mind paying for service as long as they see there's value in them. They are not a charity case. They want to be treated just like a high net worth customer. Respect, dignity, and value for service. And they seek more value from service than you and I made, because we make enough money that we'll say, okay, that's not a problem. But at the bottom of the pyramid, because the budgets are limited, they want service. So we created security, transparency, efficiency, convenience. And that became, when a noun becomes a verb as far as your product is concerned, then you know you've reached what you want to do. So people will go to banks when they came after us or Jazz and say, yaar, easy paisa kar lo. So the transfer became easy paisa kar lo.
What a fascinating story. And thank you for sharing the level of details that you did. I'm absolutely confident in my mind when the audience hears this story about you launching this international remittance solution, and understandably so, because we have $18 billion flowing in from overseas into Pakistan, and that didn't work. But your team was able to regroup, leverage the learnings from the international solution, and then launch this domestic remittance tool, which has become an out and out success in Pakistan. And so thank you for sharing the level of detail, because I am sure that's the part that a lot of viewers will be gravitating towards and looking to hear this story. And then as I continue on this conversation, very recently, I believe 2018 is when Ant Financial, backed by Alibaba in China, purchased a significant stake in the Telenor Bank. And I'm going to ask you, and as I'm sure you'd be part of some of those conversations, what was the investment thesis behind Alibaba's rich valuation of $410 million?
So, Altamash, a caveat here. I was not privy to those conversations because I had already sold my bank to Telenor a year ago. But public information is that they valued the bank at $410 million. They invested $145 million for a 45% stake or something like that. So this is money coming in into the bank. And the valuation was driven by the amount of mobile wallets that EasyPaisa had at that time. So we moved from OTC, over the counter transactions, which are digital, cash, digital, to the mobile wallets. And now they are close to 55 million mobile wallets in Pakistan. The mobile wallets, take a little bit of detour because that's a fascinating story as well. So I approached the team and I approached the central bank and said, listen, we can't open bank accounts because the regulation at that time said you had to physically go to a agent, have your picture taken, give your CNIC copy, and the picture had to be of sufficient quality, of the CNIC for us to be enabled to do that. Although that was a great step from having going to be a bank branch as opposed to an agent, but still it was still convoluted. So we went to the central bank and I led this conversation and said, listen, we have two great things that most countries don't have. One, we have NADRA, which is if you're familiar with the computerized national identification, card, CNIC, everybody in Pakistan who's of adult age has that. And NADRA makes this available for a real-time online verification. So in many countries, there is no universal identifier. And if there is even one, then it's not available real times. Like in Bangladesh and in Egypt, this is not available to financial institutions for real-time verification. You have to write to them. You may get a response in a month's time. So we had that. And then because of the abuse of the SIM, the PTA decided that anybody who needed a SIM in Pakistan would have to get biometrically verified. So all SIMs had a period of time. If they didn't get biometrically verified, the SIM would be cancelled. A SIM is, as you know, what you put in the phone PVL to make a call. Is not available at a shop right now. If you go and want a new SIM, it will be delivered to your house or your primary address. So those filters came in because there were many abuses. When you bought a SIM, you gave the agent your identity card. He used that identity card to get 15 other people on your ID card and issued them SIMs. And all of those people were paying, so you never got a collection call. Then the PTA came up with a online number where you could put in your CNIC number and it would tell you how many SIMs were issued against that CNIC number. So when I put in mine, there were 13 SIMs outstanding in my name. Then I know I only had 5. So the first of all, they limited the number of SIMs to 5, and then you could clean up all those other SIMs. So that was a great step. So we went to the central bank and said, listen, the people we are opening an account for are biometrically verified. They are available in NADRA. We can match their phone number with the CNIC number and the biometric verification. Give us something what we call a level 0 account. Put conditions on that as to the amount of transactions you can do. So limit the amount of transactions, but allow us to open this remotely. Central Bank agreed. Now, for the telco banks, you can dial, for example, 786 hash in your CNIC number, and within a minute, you can open a bank account, level 0 bank account. That was revolutionary. And it was that got these mobile wallets started, so that people were rather than you try opening a bank account, even though we have Asan accounts right now, try going to a bank and you'll see how difficult that journey is. So we were able to convince the regulator that you could open a mobile account just through an SMS. If you wanted more activity in that account, then you could go to a branch and open a normal account. So the KYC AML met the state bank's requirement, and that was the journey of the mobile wallet, which now we have 55 million of. So coming back to your question, Ant looked at 3 things in my view. They looked at the fact that EasyPaisa had 15 million wallets, and Ant knows how to work wallets. They looked at the fact that EasyPaisa had close to 80,000 agents, and this is their strength. They convert agents from retailers to e-tailers. That's why they bought Rocket they bought Daraz from Rocket. It was the other big. The only 2 transactions in Pakistan where an exit had taken place. One is Tameer Bank, one is Daraz. And thirdly, Tameer Bank, which is now known as Telenor Bank, had a lending license. So they were going to use the digital footprint that they would create at these Kriana stores for using QR code or other means of digital acceptance versus cash. Based on that, they would lend money to these mom and pop stores, which is what Ant is famous for in China. So my view is, and this is speculation, because I haven't had this conversation, but that's why I think Telenor Bank got valued where it got valued.
Again, what a fascinating story. You've provided us so many level of details. You provided me context even beyond the question that I asked, and I'm glad you did, because that mobile wallet piece, I feel, is the future and the direction that the Pakistan economy would be heading towards. And so let's shift gears to that part of the conversation. You mentioned this subsequently, you ended up leaving Telenor. And when you left Telenor, you founded your early stage venture capital fund, and it's called the Planet N Group of Companies. And the literature that I read up on said that this is an emerging market, social impact, and tech investment firm. And you have 30 portfolio companies in your fund to date. So I'm going to use or ask you to leverage your experience in this role. You've made some bold predictions about the Pakistan's digital economy moving forward. In fact, you've said by the year 2025, Pakistan is going to have 50 million borrowers and 10 million merchants for branchless banking. So some staggering numbers, especially compared to where we are right now. And so I say, given this future, I'm going to ask you what problems need to be solved by the next fintech unicorn that comes out of Pakistan.
So, I mean, the first unicorn that comes up, there are now no unicorns in Pakistan for the moment. There is one. Zameen.com is a unicorn. They've been valued at a billion, as such. They keep it on the low, but this is what their valuation is. So we are very lucky, Altamash, to have very progressive regulators. Okay. And the State Bank, the SECP, and the PTA, you know, always come up with stuff that the industry asks them. They consult with the industry. Sometimes the State Bank comes up with a very heavy capital requirement, but still the regulations come up. So the microfinance regulations were created by the central bank, giving a specialized license for microfinance banks which didn't exist. And because of that, there are 9 microfinance banks, and they own 50% of the 8 million customer market in Pakistan as such. Then they came up with the branchless banking regulations, which allowed a bank and a telco to work together. And it was the first time the State Bank approved a telco owning a bank, which was Telenor owning 51% of a bank, even though it was a microfinance bank. Then they came up with PSO, PSP, and now EMI. I'm just saying that we have a very robust regulatory framework, both by the PTA, by the State Bank, and the SECP. So it's not the lack of regulation that's not going to get it to the next level. Unfortunately, our commercial banks make the bulk of their money from investing in government securities. They have cheap deposits from branches in rural areas. Their big fives cost of funds is under 2%. They have 65 to 70% current accounts, saving accounts. They take all that money, instead of lending it to the people what they're licensed for, they lend it to the government, because the government has a huge imbalance between its revenue and its expenses. So everybody's involved in that. Everybody looks the other way. The purpose of a bank taking deposits is to be able to lend to the public, which it doesn't. So I'm not expecting huge things from the commercial banks, but I'm expecting huge things from other players. I expect telco-owned banks, because telcos have customer bases. Zong has 39 million, 65 million with Jazz. Telenor maybe 50, 55 million. That's a large customer base. The entire banking industry doesn't have that kind of customer base. You have now apps like Facebook, probably 35 million customers. TikTok, 22 million monthly active users. Instagram, 12 million active users. WhatsApp, 50 million plus active users. It's these institutions which are going to be the future of financial inclusion, not your commercial banks. And fintechs need to develop use cases. The problem with fintechs in Pakistan is that we are long on innovation, smart ideas, short on capital. So we can't raise, no fintech right now has raised, for example, $10 million, let alone 20, 30, $40 million. There are a couple, I'm told, in the pipeline whose Series A is going to be 10 million, but it's a very small amount. You can't create a huge infrastructure with that kind of money. So, unlike our neighbor again, where fintechs have raised hundreds of millions of dollars and they've got to $1 billion, we are still very early stage. Maybe 10 companies have raised Series A at best. Otherwise, we are seed and pre-seed. One company has raised Series B. So capital is still a constraint for expansion. So three things. One, fintechs will need to work with banks, and it's a win-win situation if banks can see that and fintechs can see that the innovation, nimbleness of fintechs and the balance sheet of the banks can provide a big solution if banks start to see it this way. But the other institutions, Baikia, Kareem, are all going to get into financial services. When you have a railroad and a customer base and you've paid for that original railroad, there's nothing stopping you. Look at what GoJerk has done in Indonesia to start financial services. This number I talked about, 50 million borrowers, right now, entire industry is 10 million, is talking about lending nano loans based on smartphone data or alternative lending basis, GSM data, and people getting people into the credit net and creating a credit history so they can then be gradu- graduated so they can borrow from normal commercial banks. It's a journey. Five of our companies are doing this. The lending piece. The payment piece is getting there, but the use case and the wallet that we need has still not been developed. The biggest use case, the most successful use case in China is payment at the mom and pop store. If you look at the hierarchy of payments in a normal household, you've got utility bills, which we take care of, transport, which take care of a little bill, rental, which we don't take care of, and most important, grocery shopping and school tuition. So we've only taken care of one, which is the utility bill payment. Pakistan is a cash society. We've got 6.2 trillion rupees floating around in the system, which are printed in a bank account. And we're a nation of tax minimizers. The number of people who just submitted the tax return as of December 8th, which was the deadline, is 1.8 million people in a country of 220 million people. So people avoid tax. Therefore, the bulk of our tax comes from indirect taxes, which is aggressive as opposed to direct taxation. Only people who pay taxes are people who are salaried because it's deducted at source. So if you're going to make this breakthrough, the infrastructure exists, the regulatory environment exists, the population exists, the railroad in terms of distribution network exists. We've got to come up with the collaborations and looking at the pain points, what the customer uses. You can't shove down a solution down the customer's throat. Okay, you have to see what their pain point is. So if I go to a mom and pop store and I tell them I want you to put a QR code and accept digital payments, he's going to tell me, so main kyun karu? Why would I want to do this? I'm happy with the cash. On top of it, you're going to tell me that I have to pay you 0.5% of the sale that I want to do. That's good for large stores. That's good for an Agas or a Nahid or an Imtiaz. But an average mom and pop store says, why would I want to do that? So what is the pain point? Their pain point is nobody lends money to them. They lend money to all their neighborhood. They have a khata where they do this, but the supplier and the FMCGs don't necessarily lend them money. So you got to give them working capital. So if you give capital to the Kriana store, then they may decide to look at the digital acceptance. Then you would build the use case in your wallet where you start making a dent in this 6.3 trillion. But the other thing that you're going to have to challenge is that then he's going to say, sir, main to tax net mein aa jaunga. So you have to work with the FBR and say, listen, you want 1 million more people paying taxes, give them a 3-year holiday. Don't tax them right now. Let them get into the digital world. 3 years from now, tax them what's available on the digital side. So we still have ways to go. But until we create the use case in the apps that the customer wants, we're not going to get to that inflection points that I was hoping we would get to.
Again, some fantastic insights. Uh, Nadeem Saab, you had mentioned in the past entrepreneurship is about resilience. You have demonstrated this trait time and time again, and through stories even today, whether it was founding Tameer Bank and then bouncing back from that setback in the early years of the bank, and then as well making a successful pivot from an international remittance solution that didn't really work to a domestic solution that was a phenomenal success. But most of all, I feel yours is a story about inspiring others. If I am a 49-year-old with decades of experience, corporate experience under my belt, you have inspired me to say, hey, it's still possible to relaunch your career and start a successful enterprise. If I am a Pakistani who's been living away from home for a number of years, you've inspired me to say it's still possible to return back to Pakistan and make a difference. And if I'm a university student who's recently graduated, you've inspired me to believe that even though I'm challenged by the current job market in the traditional economy, entrepreneurship is a viable career path. So, all in all, thank you for the inspiration. And my final question to you as we wrap this up, we started with a high level question, and it's only fair that we end with a high level question. I'm going to ask you to take out your crystal ball, look forward to the year 2025, and talk us through what Pakistan's digital economy looks like, whether it's evolution of daily consumer habits, whether it's how traditional players have been disrupted, or even the role of entrepreneurship in our economy.
So I see 5 segments where I see significant digital activity. And in fact, those are the 5 segments we're investing in. Fintech is how people are making payments, how people are going to be saving. Pakistanis don't save in banks, they save in committees, they save in gold. So figure out solutions, they save in livestock. So we need to figure out solution for that. So fintech, how the financially excluded are going to come into the market, not necessarily being serviced by banks, but by service providers who work with banks. Central Bank is already working on an open banking policy where the data that resides in commercial banks belongs to the customer and should be made available to whom the customer wants to give it to digitally. I think that will enable the lending number that we have, only 10 million customers, to significantly increase, which will be both lending to people and lending to the mom and pop stores and the SMEs. In the next 5 years, we should definitely see traction in that. Second segment that I see major activity in is education, edtech. With the closure of the schools, a plethora of people who never looked at this decided to now do remote instruction, whether it's tuition or schooling. This is not going to go back to its old stage. I understand that interacting with people physically is an experience that needs to be done, but education tech will take off and many people will get digital services. So in remote areas of Pakistan, you might see a tablet and a teacher, but the curriculum has been developed by somebody else and the teacher is providing that curriculum, Pakistan's curriculum, but in a digitized format, which already companies are doing. So EdTech, another big segment that we are investing in. Health tech, telemedicine, digital pharmacies, doctor's appointments, COVID testing, all this is taking place. So health tech, including taking your own data and having digitized. So if I'm going to Khan, I don't need to Khan Hospital. I don't want to carry my thadda of tests. I should be able to have them in the cloud or on a USP of all the tests that I've done. Easier said than done, but we're starting to work on that. So fintech, edtech, education tech, insurance tech, major change. Insurance is something, again, like financially excluded. Pakistan has very little life insurance. The annual premium is less than 0.5% of our GDP. Countries neighborhood are 2.5, 3, 4%. It's the digital onboarding and, more importantly, the digital claims. Health insurance, again, we're working on. But the two things which are happening big time in our neighboring countries we haven't touched on is domestic travel insurance, home content insurance, cell phone screen and cell phone insurance. These will eventually take off. So insurance tech, then agri-tech, again, an area that requires waiting for disruption to take place. And lastly, infotainment, which is what when you can't do anything sitting at home, you're going to watch things on your television, or you're going to play games, or you're going to, do something in the gaming segment. Those are, in my view, things that are going to shape employment in Pakistan, shape the digital future of Pakistan, and are going to be the drivers of this digital acceptance versus physical presence. I want to end this with a message to young entrepreneurs. And I rely always on poetry to give my message across. And both Faiz as well as Iqbal are my favorite poets. I'm going to use another verse of Iqbal. And Iqbal said, हम खुद तराशते हैं मनाजिल के संग मील हम वो नहीं है जिनको जमाना बना गया We are creators of our own destiny. We are not created by circumstances. Thank you, Altamash.